Welcome to the podcast. It's your host, Bobby Baby, and we're talking about money, business, credit, NBC podcast. It's for entrepreneurs looking to grow. We're going to be talking about all kinds of things like finance, business, credit, you name it, breaking news, all of it. Today, we're reacting to a video made by Graham Stephan, where Trump is proposing that income tax could be eliminated by using this tariff strategy. So without further ado, let's get into the video, and we're going to react to the video and discuss, is this really possible?
The tariffs work out like I think a thing like that could happen.
Do you think it's possible to find a way to eliminate federal taxes?
There is a way.
Can we reform taxes to eliminate the need to file?
There is a chance that the money from tariffs could be so great that it would replace.
What's up, you guys? It's Graham here, and
Okay, so, this video obviously is going to be about the fact that if you can actually replace the tariffs, the income tax with tariffs. Now, I don't know if you guys know who actually pays for the tariffs. If you do and you're watching on YouTube, leave it in the comments. I'm curious to know how many of my listeners actually know exactly how this tariff game works and who actually pays for the tariffs. Now, we're going to talk about it and we're going to get the answers to that in this podcast. But I'm curious to know who actually knows about it. Okay, let's get back to the video.
it's the main source of income. And if that were to happen, you would owe nothing to the IRS. The April 15th tax filing deadline wouldn't even exist, and you would be able to keep 100% of what you make. So is this actually doable, or is it a horrible idea that'll completely destroy our economy? Well, given all the misinformation floating around on the internet, I thought that we should break down exactly what it'll take to replace income taxes with tariffs, whether or not this is even possible, and what it will realistically take to actually make this happen. Because the truth is, it's pretty surprising. Although before we start, I did a ton of research to put this video together and make it as unbiased as possible. So if you appreciate that, please do me a huge favor. All right, now, in order to understand exactly how we could abolish the IRS, let's start here with tariffs. Now, I've said this before, but think of tariffs like an additional tax that's collected anytime you import goods from one country to another. The theory is that if imported goods become more expensive, it encourages people to buy it locally instead, thereby helping out their own economy. Or if they...
So that's, first of all, that's what a tariff is. Okay, so a tariff is a tax that is put on goods, products, merchandise that is coming from another country, in this case, into the United States. So it is a federal duty, tariff, customs, tax, whatever you want to call it, is money. Okay? That is paid to who? That is paid to the government. Okay? The government collects the tariff. Now, who pays for the tariff? Well, let's see.
They don't buy locally made goods, at least the country gets to collect a little extra revenue in the process. And if that sounds confusing, let's take the example of a television. In this case, imagine that China manufactures and imports televisions to the United States for $100 each. Well, this competes with American-made TVs that cost $200. And as a result, American-made products are seen as more expensive and less competitive. So in an effort to level the playing field, a 100% tariff is placed on Chinese imports of televisions. And all of a sudden, both items now cost the exact same amount when sold in the US, thereby increasing revenues for the government, making American products slightly more appealing, and also making them slightly more competitive. Now, in terms of who pays the tariff, it's not paid by the other country, but instead by the person or company who imports that item to the United States.
Okay, now let's make sure that we understand this, right? So the tariff is not paid by the country that's doing the exporting. For example, in this scenario, a TV made in China, China's not paying the tariff. China ain't paying nothing. They're just making the same thing they always make and sending it over. Now, who's paying for it? Well, it's the company, the person, the individual, whomever that's importing that product into the United States. They're the ones paying the tariff. Okay. The importer is paying the tariff to the federal government.
In this case, if Google were to import televisions made in China and they bring it into the United States, Google is the company responsible for paying the additional tax, not the country who makes the item. Anyway, this is obviously a stupid example just to illustrate a point, but apply this thinking towards practically anything that you buy, from clothing to batteries to cars and electronics, and all of a sudden that additional tax makes locally made goods that much better. But is that something that could actually replace the
Now, does it make it actually better or does it make it more expensive? All right. So there's a couple of things that play here. Number one, if you're going to make that same item in the United States, it's going to be a lot more expensive. Number two, is the consumer going to choose to purchase a product that's made in the United States versus a product that is made in China, for example, if they're the same price? Okay. Because in this scenario, if a TV that cost $100 previously now costs $200 and is compared to a TV that is originally $200 but is made in the United States, are you going to buy the one made in the US? Let me know. I'm curious. How much? You love it.
The income tax. Well, surprisingly, the way we pay taxes is actually a relatively new concept. In fact, for the first 100 years, the US government funded itself almost entirely from tariff revenue on things like tobacco and alcohol. That's because back then, the government was relatively small, and when you only spent 3% of your total GDP, it doesn't take much to run the entire country. However, by the late 1800s, policymakers
Okay, so when it all started, that's how it was done. So this concept of paying for income tax with tariffs is not new. That's how we started. That's how it started. Okay. But the problem was the government was very, very small back then. It didn't take a lot. So you didn't need to tax the people on their income. You taxed them on, in this case, tobacco, whatever other small things that were coming in. And you were able to fund the government with that money. But obviously that is not the case as it stands right now.
recognized that tariff revenue was a rather inconsistent income source, and it was either great or a bust during times of prosperity or a recession. So when the US entered its civil war, a temporary income tax was implemented to help raise a little bit of money. How much, you might be wondering? Well, back then, it was a 5% tax on incomes between $600 to $5,000, a 7.5% tax on incomes between $5,000 to $10,000, and a 10% tax on everything above that. However, in 1872, taxes were...
So they went from no income tax to tax because of the war, and it was 5-10% depending on your income, right? And then, as you're going to see here, the Supreme Court said that, hey, taxes are unconstitutional.
Were declared to be unconstitutional, so they were repealed. But that didn't last very long, and by World War I, taxes were back on the table as a way to finance the war. Except by this time, income taxes were deemed as a much more reliable and consistent way to raise money for the government that actually helped grow the economy. As a way of doing that, they reduced tariffs, which allowed Americans to spend more money. And with a lower cost of goods coming in from other countries, we really developed as a society. That, of course, continued throughout World War II when Congress created payroll, withholding, and quarterly tax payments to make sure they'd earn revenue as soon as possible. And over time, the income taxes that were meant to be just temporary eventually stuck. In this case,
so the tax was supposed to be temporary, the income tax. Obviously, it didn't work out that way. Okay. And they felt that it was a more consistent way to raise money consistently because, number one, the tariffs, depending on the year and the import, it was a boom or bust type of thing. It wasn't consistent. That's number one. Number two, it was more beneficial to decrease the tariffs and provide Americans with lower cost goods and thus increase spending, right? So you increase sales because now you've got cheaper products that more people can afford.
The more we paid into the system, the more the government grew. The more the government grew, the more reliant they became on that income. And the more we grew the national debt. Put simply, this is the amount of money the US government borrows and owes in interest to pay for its continual spending. And really since the late 1800s, we've run at a deficit almost every single year, meaning we spend and borrow way more money than we take in. Now normally, this isn't seen as that big of a deal when our spending's relatively in line with our gross domestic product. However, once you start borrowing an extra $1 to $5 trillion every single year, for decades, it begins to add up. We have about $1.5 trillion allocated towards Social Security, $1.5 trillion for health and Medicare, $850 billion in interest payments, $750 billion for the military, $500 billion for education, and pretty soon, before you know it, you've spent over $6 trillion while only bringing in $4.3 trillion. This means that we...
So that's a major problem, of course. All right? So you're generating $4 trillion and you're spending $6 trillion. That's what creates this deficit. Okay. But what's interesting about this and what, goes unmentioned at times is that who's printing the money. When you've got the money printing machine, it's very, very easy to do that. When you hold the world currency, which now other countries are challenging, but for the moment you hold the world currency, which is the US dollar, you've got the machine in the backyard to print out how much ever money you want. So it's very tempting that you're going to be spending tons of money. The government is going to be growing exponentially, so is your spending, and thus the deficit keeps on increasing, meaning you're spending way, way more than what you're bringing in. Now, this goes back to the question, well, can the income tax be offset, taking all this into consideration, taking in the debt into consideration, and taking in the money coming in from tariffs?
We've just spent an extra $1.7 trillion that gets added to our national debt that's now projected to hit $53 trillion by 2035.
53 trillion!
What I'm getting at. The government currently generates about $2.2 trillion from income taxes. So hypothetically, income taxes would be able to be eliminated entirely if the government could somehow spend $2.2 trillion less, make $2.2 trillion more from tariffs, or force a combination of the two. And
so 2.2 trillion. That's what is brought in through income tax. So where is that money going to come from? So either you've got to decrease spending or you have to increase revenue. There's only two things that can happen here. And in this case, increase revenue by tariffs. But is that actually something that's legit? Can it happen?
The likelihood of this actually happening, here's what I found very surprising. Although before we go into that, in terms of what I'm personally doing about all of this, I'm just using it as a way to diversify. Like analysts have made the argument that Bitcoin serves as a hedge for instability. Abolish the IRS and replace it entirely with tariffs, here's what it'll realistically take. As you can see here, in 2025, tariffs have so far raised almost $100 billion, which sounds fantastic until you realize that that only covers 5% of the entire deficit, meaning we would have to increase tariff revenue by 20 times just to cover the amount of overspending in the government alone. Let that sink in. Basically, the entire year of tariffs is only going to generate enough money to pay for Social Security for 3 weeks. But fine, there's certainly the argument that tariffs will increase. This is just the very beginning. It could add up to a lot more money over time. Great. Well, here's what would have to happen in order for that to work. Let's start with removing all taxes. In this case, the government would need to replace about $4.4 trillion worth.
So that's a lot to replace. Are you going to be able to replace $4.4 trillion? Once again, what are you going to cut? You're going to have old people just fending for themselves, hunting and gathering? Are you going to eliminate Social Security? Are you going to decrease military spending? I doubt it. Where's the money coming from?
The revenue collected from the public, corporations, and employment taxes. So tariff revenue would have to jump by 44 times just to balance out. This means from a practicability standpoint, if we import $4 trillion worth of goods to the United States, those would have to double in price on everything just to break even. Like if this were to happen, you would wind up spending about $4,000 for an iPhone, $10 a gallon for gas, or a 100% increase in the cost to build a home. Like, let's be real. If the price...
I mean, is that feasible? Is that okay with you guys? So if you want to eliminate the IRS, you want to eliminate the income tax, and you want to generate that money with tariffs, are you willing to pay $4,000 for an iPhone? $10 for gas? How about tripling the price of anything? And as a small business owner that's importing things and selling them, maybe you're on Amazon, maybe you're on eBay, maybe you're, I don't know, printing t-shirts, maybe you have a whatever, anything you're selling. Do you think that people are going to pay double or triple the cost that it is right now?
If every single import doubled overnight, we just wouldn't import anything anymore, and our revenue would decline substantially. As a result of that, our economy would likely crater, our dollar would plummet, and we would enter the worst depression imaginable because we've cut ourselves off from the rest of the world. Plus, most people would just spend more money on the cost of increased goods than they would have just spent in taxes to begin with, so it would defeat the entire purpose of saving money. We would also be
I don't know if you guys caught that or not, but essentially what that would mean is that it's cheaper to keep her. All right. I don't know if you guys ever been in a relationship where it's just cheaper to keep her than get rid of her. In this case, that might be the case, because keeping income tax and paying the income tax is going to be a lot less expensive than increasing tariffs by 20x. And now all of a sudden an iPhone costs $4,000. So was it better to pay the tax on your little money that you were making? Or now do you want to crater the economy because everything's so expensive? No one can afford nothing. And everything has gone to shit. Because if you didn't know, the whole economy, this whole house of cards is based on the fact that we consumers have to spend money. If you don't spend the money, nothing goes around in the merry-go-round. There's no carnival. Okay? The show is over.
The only country in the world to fund ourselves with 100% tariffs, so that would be quite the accomplishment. Of course, that's not to say that tariff revenue can't be increased over time, and one study made the argument that tariff revenue could theoretically be as high as $780 billion before having diminishing returns. But so far, no developed country uses tariff revenue of more than 2.7% to fund revenue, meaning, again, this would be unprecedented, and it would still fund less than 20% of the overall government budget. And this doesn't even account for the possibility of other countries starting a trade war or igniting a global fallout. But what if there was a way to reduce income taxes by just getting rid of personal income taxes? In this scenario, personal taxes make up about $2.2 trillion worth of revenue. So tariff revenue would have to increase by 22 times today's levels just to make this work. Again, just as a hypothetical, you would have to pay at least 55% more on every single imported item just to begin to make a difference. And that's assuming that people have the money to spend on this, which they don't. Inevitably, this would cause just as much of a global sell-off. The poor and middle class would bear and pay for the brunt of this, and we would
yeah, so if you're broke, you're going to be even way broker. Okay? Because rich people, they're gonna find a way. All right, they just mark it up, and you figure it out. Right? Companies, big companies. Oh well, now all of a sudden, your T-shirt costs what? Now it's $20. It costs $100 for a regular Hanes T-shirt. Not some fashionable, wool branded. No, just regular Kmart, Costco. Is that cool? Oh, you need a new phone? Yeah, $4,000. $10 for gas. You're not going anywhere.
Still spent trillions of dollars that we just don't have. So how would this ever actually work? Well, the honest answer is it can't. It would be impossible to eliminate federal income taxes. The government just spends too much money, and tariff revenue is never going to be enough to be able to replace it. But hypothetically, if we could, here's exactly what it would take. First, the government would have to completely eliminate the deficit. This means if the United States makes $5 trillion, we have to find a way to spend $5 trillion. And at the rate we're currently going, that means that we need to cut $2 trillion just to break even.
That'll never happen. Doge got fired so fast. My boy Elon back to work. He's like, forget this. This is some bullshit. I'm getting back to Tesla and me and my robots and shit. All right. So are they going to cut $2 trillion? I doubt it. What else is the situation, Graham?
In order to do this, we'd have to probably cut Social Security and Medicare by half, saving us $1 trillion. We'd need to reduce the military budget by another 50%, saving us $400 billion. We'd probably need to default or refinance our interest payments, saving us another $400 billion. And then with 15% budget cuts across everything else, we could now get to a point where we make and spend the exact same amount. I guess if we just stop there, theoretically, we could eliminate all income.
Yeah, so put the old people back to work. We're not paying for nothing. Cut everything. Everything goes to shit. Your military spending is nothing. Do you think that'll ever happen with the situation the world is going in? I doubt it, baby. I seriously doubt it.
Income taxes and be on the same trajectory by adding to the national debt. But also, that's probably not going to be enough. So second, we would have to reduce spending even more. At this point, if we could cut another $1 trillion from government spending, then we could only add 3% to the national debt every year over what we already owe and let inflation take care of it over time. To do this, we'd have to cut most social services, the Department of Education, reduce Social Security by another 25%, and cut the military budget down to what's absolutely necessary while refinancing all of the national debt. And then we could probably...
So cut Social Security, cut all that welfare stuff out, all of it. If you're broke, you're going to be way broker. Right? Then what happens? People stop spending. People don't sell. Businesses can't generate a profit. What happens to the stock market? Are we really going to be able to fund no income tax with just tariffs, 100% tariffs, when other countries are only using tariffs to spend like 2-3% to cover 2-3% of their spending? Seems a little far-fetched.
Get rid of personal income taxes as long as we also 3 increase tariff revenue. Look, the truth is we could only increase this so much before it has a negative impact on our economy. And even though we're on track to surpass $100 billion of tariff revenue, that's still just 2% of everything the government needs to run. This means, without a very long-winded answer here, replacing any meaningful amount of U.S. revenue from tariffs is essentially zero. The U.S. government...
Yeah, so essentially zero. Right? In order to eliminate income tax, defund, or whatever the IRS is concerned, and solely base it on tariffs, you got to tank everything. You got to tank the whole economy. You got to cut all kinds of spending. You got to get rid of the out of the national debt. You got to eliminate $2 to $4 trillion from your balance sheet, from your budget. Okay, is that realistic? Leave it in the comments. I don't think so.
It would basically have to cut all spending by 50% while increasing tariffs 10 times where they are today to even begin to move the needle. So that's just not going to happen. I hate to be the bearer of bad news here. That's why I think, as fun as this is to imagine, it's just not feasible, no matter how you try to make it work. And the government today is not the same as it was 100 years ago. But that's also not to say that we can't cut down on a lot of wasteful spending. Like in 2015, the government issued $1.3 million to study how to keep beer.
Okay, yeah. So, yeah, okay, they cut a bunch of stuff out. But once again, you know, I don't know what Doge is doing anymore. Like I said, Elon, he back to work. His shareholders were like, yo, our stock is tanking and you're over there paying tiddlywinks. Come on back and get this money, baby. All right. We're going to have a whole nother video on how much Elon plans to make. He's still not done being the richest man in the world, right? He's got a new contract that'll be coming up in a podcast soon. So to make a long story short, this whole concept of tariffs, I understand it. Number one, other countries are not playing fair. And that's where this whole thing started. Okay, you can't have ridiculous tariffs on our stuff and then think that you're just going to import everything, you know, just freely. But at the same time, it's got to be understood who's actually paying the tariff. So companies that are based in the United States, individuals that are bringing things over from China, whatever they may be, small business owners even, they're the ones that are paying. Not China, not Vietnam, not Taiwan, not anybody else, not India, none of those. Small businesses as well as corporations are the ones that are paying. Initially, you know, it never stops there. Who ends up paying is me and you, the consumer. So now that $100 television that you know, got the deal on, which, you know, is probably the same quality or even better and half the price, is now $200. Doubled, right? So what they're banking on is that we, the consumers, given a choice between two televisions that are the same price now, because one has 100% tariff on it and the other one was just $200 anyway, are going to choose the product that's made in America. Because we are so conscious of that and so intelligent? No, most people are dumb. Do you even know where any of this stuff is made and what's really made in the United States or not? How many dummies are going to figure this out? But I guess they're saying there's a better chance that you might buy the $200 TV that's made in the United States now that the Chinese one is also $200. So in the end, we, the consumer, are paying and are ultimately the ones that are going to decide if this whole thing is going to work or not, because you have the choice. We have the choice of now what we're going to buy. Are you going to be so conscious and see that, okay, we're going to buy something that is made in the United States rather than made anywhere else now that they're the same price? So that's the question. what's it going to be? Once again, money, business, credit. We'll see you in another podcast here very, very soon. And don't forget to subscribe, like, share the podcast. And if you're watching this on YouTube, I want to know your thoughts. What are your comments? How do you feel that this whole thing is going to play out? Right? Let me know, baby. Peace and love.